friends, I am back with another video, and in this video I will explain you the components of statement of comprehensive income with a sample chart of account. Topics to be covered: components of statement of comprehensive income, sample chart of accounts for comprehensive income, or income expenditure statement. Components of statement of comprehensive income. The income statement is one of company's core financial statements that shows their profit and loss over a period of time. The profit or loss is determined by taking all revenues and subtracting all expenses from both operating and non-operating activities. The income statement displays the company's revenue, costs, gross profit, selling and administrative expenses, other expenses, and income, tax paid, and net profit in a coherent and logical manner. Components of an income statement. Revenue or sales. Sales revenue is the company's revenue from sales or services displayed at the very top of the statement. This value will be the gross of the costs associated with creating the goods sold or in providing services. Some companies have multiple revenue streams that add to a total revenue line. Cost of goods sold. It is a line item that aggregates the direct costs associated with selling products to generate revenue. This line item can also be called cost of sales if the company is a service business. Direct cost can include labor, parts, materials, and an allocation of other expenses such as depreciation. Gains. Gain is a result of a positive event that causes an organization income to increase. Gains indicate the amount of money realized by the company from various business activities like the sale of operating segment. Likewise, the profit from one-time non-business activities are also included as gains for the business. Although gain is considered secondary type of revenue, the two terms are different. Revenue is the money received by a company regularly, while gain can be accounted for the sale of fixed assets, which is counted as a rare activity for a company. Gross profit. Gross profit is calculated by subtracting cost of goods sold or cost of sales from sales revenue. Marketing, advertising, and promotion expenses. Most businesses have some expenses related to selling goods and or services. Marketing, advertising, and promotion expenses are often grouped together as they are similar expenses, all related to selling. General and administrative expenses. It includes the selling, general, and administrative section that contains all other indirect costs associated with running the business. This includes salaries, wages, rent, and office expenses, insurance, travel expenses, and sometimes depreciation and amortization, along with other operational expenses. Entities may, however, elect to separate depreciation and amortization in their own section. EBITDA. While not present in all income statements, EBITDA stands for earning before interest, tax, depreciation, and amortization. It is calculated by subtracting SG&A expenses, excluding amortization and depreciation, from gross profit. Depreciation and amortization expense. Depreciation and amortization are non-cash expenses that are created by accountants to spread out the cost of capital assets such as property, plant, and equipment. Operating income. Operating income represents what's earned from regular business operations. In other words, it's the profit before any non-operating income, non-operating expenses, interest, or taxes are subtracted from revenues. Operating income is a term commonly used in finance and stands for earning before interest and taxes. Interest expense. It is common for companies to split out interest expense and interest income as a separate line item in the income statement. This is done in order to reconcile the difference between EBIT and EBIT. Interest expense is determined by the debt schedule. Other expenses. Businesses often have other expenses that are unique to the industry. Other expenses may include fulfillment, technology, research and development, stock-based compensation, impairment charges, gains or losses on the sale of investments, foreign exchange impacts, and many other expenses that are industry or company specific. EBT, pre-tax income. EBT stands for earning before tax, also known as pre-tax income, and is found by subtracting interest expense from operating income. This is the final subtotal before arriving at net income. Income taxes. Income taxes refer to the relevant taxes charged on pre-tax income, that is EBT. The total tax expense can consist of both current taxes and future taxes. Net income. It is calculated by deducting income taxes from pre-tax income. This is the amount that flows into retained earnings on the balance sheet after deductions for any dividends. Now let's see the chart of accounts for a statement of comprehensive income. Revenue or sales increases when credited. Account group operating income, account nature income affects the statement of comprehensive income. Sales return increases when credited. Account group operating income, account nature income affects the statement of comprehensive income. Commission earned increase with credit. Account group non-operating income, account nature income affects the statement of comprehensive income. Service revenue increases when credited. Account group operating income, nature is income, affects the statement of comprehensive income. Gains increase with credit, comes under non-operating income account group. Nature is income, affects the statement of comprehensive income. Gross profit increase with credit. Account group non-operating income, account nature income affects the statement of comprehensive income. Discount on purchase increases with credit. Account group non-operating income, account nature income affects the statement of comprehensive income. EBT, pre-tax income increases when credit. Account group non-operating income, account nature income affects the statement of comprehensive income. General and administrative Increase when debit. Account group operating expense. Account nature expenses. Affects the statement of comprehensive income. Cost of goods sold. Increase with debit. Account group direct expenses. Account nature expenses. Affects the statement of comprehensive income. Marketing, advertising and promotion expenses. Increase when debited. Account group operating expenses. Account nature expenses. Affects the statement of comprehensive income. Depreciation and amortization expenses. Increase with debit. Account group operating expenses. Account nature expenses. Affects the statement of comprehensive income. Interest. Increases when debited. Account group operating expenses. Account nature expenses. Affects the statement of comprehensive income. Other expenses. Increase when debited. Account group other expenses. Account nature expenses. Affects the statement of comprehensive income. Income taxes. Increases when debited. Account group other expenses. Account nature expense. Affects the statement of comprehensive income. Purchase. Increases when debited. Account group purchase account. Account nature expense. Affects the statement of comprehensive income. Purchase return. Increases when debited. Account group purchase account. Account nature expenses. Affects the statement of comprehensive income. Electricity expense. Increase with debit. Comes under operating expenses account group. Nature is expenses. Affects the statement of comprehensive income. Project expense. Increases when debited. Account group operating expenses. Account nature expenses. Affects the statement of comprehensive income. Rent expense. Increases when debited. Account group operating expenses. Account nature expenses. Affects the statement of comprehensive income. Mobile expense. Increase with debit. Account group operating expenses. Account nature expenses. Affects the statement of comprehensive income. Traveling expense. Increases with debit. Comes under operating expenses account group. Nature is expenses and affects the statement of comprehensive income. Salary expense. Increases when debited. Account group operating expense. Account nature expenses. Affects the statement of comprehensive income. Discount on sales. Increases when debited. Account group operating expense. Account nature expenses. Affects the statement of comprehensive income. Audit expenses. Increases with debit. Comes under operating expenses account group. Account nature is expenses and affects the statement of comprehensive income. That's all for this video. Your feedback will be highly appreciated and will help us to improve the content. Join us in the next video to know about components of a statement of changes in shareholder equity and components of cash flow statement. Thanks for watching. Do not forget to click the subscribe button and hit the bell icon for latest updates.